among these economies. Gentlemen, I am going to give you a glimpse of within the next 20-25 minutes about the concept of cost accounting standards and the generally accepted cost accounting principles. This concept of cost accounting standards is unique to India, but it's not unique in the world. I'll explain. United States of America has long back set up a cost accounting standard board under the office of the President of the US, where they have promulgated 19 cost accounting standards. But all those standards are mandatory for application among the companies. Those who are dealing with the contracts or supplies with the government. Among us, above a certain size of $5 million. So this way, this cost accounting standards announced by the United States of America are not applicable for drawing the general purpose cost statements. In Japan, they announced 10 cost accounting standards so far, but their application is left voluntary. But to surprise of all of you, many of the companies in Japan, they feel proud of announcing that the cost statements and the other accounts made by those companies are in adherence to the cost accounting standards announced by Japan. In Korea, they have a cost accounting standard and the cost accounting policy inbuilt into their accounting policy announced for the various companies. China came out with a comprehensive document called the Accounting System for Business Enterprises in 2006. That document has embedded the cost accounting principles to be adopted necessarily by all companies in China, including all the foreign entities of operating in China. So this is what the global development in a few countries I have just given you. But majority of this development has been towards drawing the special purpose cost statements. What India has taken the initiative is to announce the cost accounting standards which would have a acceptability and applicability for drawing the general purpose cost statements. So this is a very, very unique feature and a unique development which this institute has taken up. The institute had set up a cost accounting standard board about 11 years back in 2001. Now, gentlemen, we have to really understand first that why do we need these standards? I'll make the issue very simple to you. Assume a situation that a regulator is asking a set of information from two different companies. Now, unless there are any principles or unless there are any standards laid down to be adopted by both the companies, now the two set of companies may have a different understanding of the cost parameters. I'll give you a few examples. For example, interest is an expenditure. Now, is it treated as a cost by one company? It may not be treated as a cost in another company. It may be treated as an outside cost element. Similarly, look at the abnormal loss or a foreign exchange gain or loss. Or there are plenty of such expenses. For example, the penalties, the damages, or the donations. Now, are they loss? Are they cost? In one company treat everything as cost. And hence, how they calculate their cost of production or cost of sales. The another company doesn't adopt these as cost items. So therefore, they are calculating the cost of production, cost of sales by assuming that these are not the elements of cost. Similarly, in terms of recognition of revenues, for example, the subsidies or the incentives given by the state or the insurance claims received against the loss of goods and all that. Now, there are plenty of such incidents where the revenue recognition also may differ between the two companies. Now, assume a situation when both the companies are given the information to the regulator and they are following different set of principles. how do you expect the regulator to take a view on the information furnished by both the companies? None of them are really hiding anything from the regulator. They are following their own developed principles. They are following their own understanding of the cost elements and the revenue elements. Therefore, if we have to narrow down this bridge, we have to narrow down this gap of understanding the cost elements and the revenue recognition among all companies, among all users of cost data, and among all government agencies and the regulators. There is a need to have principles embedded in the form of standards. Now, this is why we, the Institute of Cost Accountants of India, felt the need for issuing the cost accounting standards. The utility of these standards, I'll just list out some of the areas for benefit of all the members sitting in Pakistan and in India. And when these standards can be used to provide a structured approach for the measurement of the costs. This is the first principle, that they provide a set of principles which is adopted by all users of the preparers of the cost data to measure the cost and present in a standard format. So by this process, there is a process of standardizing, integrating and harmonizing the cost accounting principles and practices adopted in the various entities, in business entities in the country. What would be the result of it? It would have a uniformity in the classification, in the measurement, in assignment, and in the absorption or allocation of the cost to the various cost objects. Now, this is where the uniformity and the consistency will come in the approach to be followed by the various entities in India. This would also help the professionals who are assigned the duty to attest those cost statements for the purpose of filing those statements with the regulatory body or with any government agency. They would also be following the same set of principles while they will attesting those general purpose cost statements. And lastly, all the government bodies, all the agencies in the government, all the regulatory bodies, and all other stakeholders would have a common understanding of the various principles and practices of the cost elements. Now, this is a very, very significant development need for and the utility for promulgating the cost accounting standards. Now, as I told you, the Cost Accounting Standard Board was set up in 2001. The first standard was on the classification of costs. It was announced on 8th April 2002. In January 2003, they issued 3 more standards. This is CS2 on the capacity determination, 3 on the overheads, and the 4th one was on a cost of production for captive consumption. Now, this 4th standard is not a general purpose cost accounting standard. It is meant for a special purpose. If you are aware of that, in India, there is a rule called Central Excise Valuation Determination of Price of Excisable Goods, Rules 2000, under which the goods produced for captive consumption have to be valued at cost plus a fixed percentage of margin. Now, when the goods are transferred from one unit to another or from one division to another division, an excisable goods have to have a value, assessment value, and the duty has to be paid. That duty may get adjusted at the final product level depending on the final product is excisable product. So therefore, for the valuation of such goods which are produced for captive consumption, this specific cost accounting standard 4 was announced by the institute. Similarly, a cost accounting standard 5, which talks about the determination of average equalized cost of transportation, was announced in July 2005. Now, what does it talk about? It talks that when a certain amount of goods are to be moved to across the country, for example,